What this means is that many commercial banks that have been the custodian of these government funds will have to forward the money to what is called the Treasury Single Account, or TSA, at the central bank. Lawan Gana is a government consultant and an economist. He says commercial banks have counted on government deposits in the past. They will now have to seek more private sector deposits.
Some of them, they keep the government funds in their own banks, utilize them in such a way that they can get more profit, more resources out of it, before even transferring it to the government. Now, these opportunities will not be there. But this does not mean that the banks will not benefit from this system, because they will be used to transit funds from their own banks to the Treasury Single Account. And that transiting of money from their own bank to the single account will also they will charge something.
Lawan also says the opening of a Treasury Single Account for all revenue accruing to the federal government is a tool for financial management that would stop leakages and reduce the cost of borrowing for government.
Through this Treasury Single Account, definitely, a lot of fraud and then other mismanagement of funds, either trying to, put up the money somewhere so that after some few months or weeks you can just collect your interest and return the money and so forth. These are all going to stop.
With this development, analysts say state governments who mostly depend on federal allocations should follow suit in order to maximize their revenue and stem leakages as a result of diversion of revenue due to corruption. Some states like Kaduna have already done so. Charles Doke, GoTel News.